So you remember a little over a month ago when I bought a LEAPS option on the SPY, literally right at the tops, and then since then the market has just tumbled? Well, many people have reached out, including in the Discord, like, Brad, are you freaking out? What's the deal? What are you doing about this? Do you have a stop loss? I want to talk about why I'm not freaking out and how I'm handling this LEAPS option and how you can handle a LEAPS option too if things are going against you like they are for me right now. So first, a little context here. I bought a LEAPS option on February 14th, 2025. And when I say at the top, I think the next day it went up maybe another dollar or so. But since then, since February 14th, the market has just pulled back, pulled back, pulled back. Today is Thursday, the 27th. The market has not opened. It is the morning time right now. And things are not looking good, but I am not worried at all. In the video I made about this LEAPS option, which I will link down in the comments below if you have not seen it, I talked about pullbacks and how things are going to happen. And I compared a LEAPS option almost to a rental property and said, hey, when we have pullbacks and things, that's like the roof going bad. That's like the furnace blowing. That's like the refrigerator going bad. Sometimes you are going to have to pay into that investment property over the course of its lifespan to eventually profit. And that's essentially what's going on right now. I bought this LEAPS option and then the roof went bad, the furnace went bad, and the refrigerator died all in the same month. But during that time, I've continued to collect rent on that investment by selling calls against it in the poor man's covered call. And while I'm doing so, what I'm really doing is paying back that initial cost of the LEAPS option that I paid, somewhere in the neighborhood of about $15,000. And because I made my expiration 3 years out, I know that I can collect rent for 3 years and hopefully collect all the money back that I paid in premium to purchase the LEAPS. And then if things go really, really good, that LEAPS option will also have some value at the end of 3 years, and I can sell it back to the market and make even more money. That's the ideal situation. Before I show you how much money I've collected in premium since February 14th on this option, I just want to show you another reason why we put our expirations way out, as far as we could go, and why this is going to help mitigate risk against our LEAPS option and pullbacks right now. Now, we know past history doesn't really predict the future, but it at least gives us some sort of comfort and statistics on what will probably, not definitely, probably happen in the future. So right now I have the daily on the SPY. That means every single candle is 1 day. And what I want to do is I want to focus on a bunch of big pullbacks that we had and what would have happened if you bought a LEAPS for 3 years in expiration like I did at exactly the top. Like, you could not have picked the top anymore. And what we'll focus on is we can look at maybe this pullback here, which is very, very similar. This is back in 2018. We'll look at this pullback here, which was essentially COVID. That was a much bigger pullback than we're seeing right now. And we'll look at this top right here before a major pullback from January 2022 all the way down to October 2022, most of 2022 in a bear market. And what I'll show is if we use this tool right here, we'll start, and let's say I bought a LEAPS on September 27th, 2018. So then we go to 2019, 2021. So I need to go to September 27th, 2021. And if I come across, now I am 3 years out in expiration, actually a little bit before, and we can see that if I bought that LEAPS right at the top, when it expired, the SPY was up 54.73% from the date that I bought. Even with the pullback here and even with the pullback here, when we get up to February or when we get to September 2021, we would have been okay. This is a long game. A LEAPS is a long game. We can't panic in the first month of a 3-year option. Let's take a look at the COVID time. So that was February 13th if we would have bought at the top of 2020. So I need to go to February 2023. If I go to February 2023, we can see that even with that enormous pullback, when we got to 3 years from the time we bought that LEAPS, this option was up 23.59% over that time. Once again, if you would have bought, man, a month later, you would have been thinking you were in the trenches, okay? This is bad, but not so bad at all. Let's take a look at this last big pullback that I talked about. If we were to come up to here, this was January 2022, before an entire year of a pullback. Your LEAPS would have been in the shit for a year, all right? If I go now to January 2025, look what would have happened. We go February, pretty much right before where I bought, you could see that we would be up 26% on the SPY from that time. So in all three scenarios of major pullbacks over the last 5 to 6 years, if you would have waited it out, that option would have probably expired in the money with some profit. That is the first thing that makes me okay. If this pullback was happening later in expiration, maybe that would be a little bit different. But right away, this is essentially like the best case scenario for me. And frankly, if I was a little more liquid, I might even buy another LEAPS, but I don't have another 15 grand sitting around. Since February 14th, here is all of the premium that I've collected, guys. And I'm using Tradezella here. I've been using Google Sheets for so long, and people have been telling me, use Tradezella. And I use it for my day trading. I didn't think it was so good for the, for calls and the poor man cover call, but it's been really, really nice. And the data that they give you is insane. I'll leave a link down if you want to save yourself some money and try this out. But you can see I've only had one red day on my calls. I'm taking a very, very small delta as I explained in that video. We can see here's the opening trade on February 14th. I took a week off. I did not sell any calls. And then I started the poor man's covered call. And we can see that, guys, this is it's a data. It's crazy. This is all the data we can see. But one of the things that I really like to see is the calendar here. And this is going to lead me into explaining one last thing. I like to look at how much premium I'm collecting a week. That's my rent on this poor man's covered call. 300, 255, 176, 58. It is going down because volatility is going down, and we know that IV is really going to affect the markets. My biggest week here being 424. Even though this is going down, I can look at this mathematically and compare it to the cost of my LEAPS and know that I'm probably going to be in pretty good shape. But I would say for holding this for only a month and generating $1,200 in income from selling calls so far, that's looking pretty good for the 3 years. And I always want to know, how much do I need to make every single day and every single week to keep myself out of hot water? That's when I know that I should be getting nervous, or that I should think about closing this, or thinking about a stop loss, things along that. I will go to the Google Sheet, because on my Google Sheet, I like to keep that daily and that weekly data. And I go back and cross-reference what I just saw on how much I'm making. If we look here, this is every single trade that I've made, and I like to make a nice little profit chart. It's the same chart here, just a little bit more zoomed in. If we come down to the bottom, this is where things get a little bit interesting. Right now, today, as we go to the open, this was actually on 314. I need to update this, but it had a value of about $10,000, where I paid $14,000 for it, okay? I've collected an income that $1,215.80 so far. Right now, I have 105 days till expiration. I wrote for 3 years out. That means that I only need to generate between now and then $2.32 to pay back the $14,454 that I collected. If we look at how many weeks I have till expiration, I have 144 weeks till expiration. That means that I need to generate $16.25. And I know from this chart right here, if I were to go down to my reports and I go to my calendar, I am making well over $16 a week right now. That would essentially be one call a week that I can make and still break even. Now, if the market continued to tumble and we went way down here, I could still take very, very small delta calls, and I feel confident that I could make $16 a week. If this number were to jump up, right, if we got close to expiration and things weren't going right, and this per day went up to $50 per day, or this amount per week went up to $500 per week, that's when I might get a little bit nervous about what's happening with that call. But right now, guys, so early, if you wrote a LEAPS anytime in the last month, or really anytime in the last 6 months, you bought that LEAPS option for many years till expiration. Hold tight, stick to the plan, continue to write your covered calls. If you have any other questions, get down in the comments section below. Let me know what your questions are. Let me know if you think I'm full of it. I love hearing I'm a donkey from time to time. And if you want to get inside the Discord and see these trades every single day in real time, including my futures day trades and all that, I will leave a link down in the description below. For all you channel members, you guys also have access to the Discord. So if you are a channel member, make sure that you've gone in and clicked and joined that Discord as well. I hope this cleared up the poor man's covered call for you. And I will make another video talking about the puts, the other thing that I'm dealing with, selling daily SPY puts, because we know that that's been a disaster as well. So look forward to that video in the next couple days, and I'll catch you guys on the next one.